Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange bringing you a review of this week's stock market. On Monday, markets soared after the FBI for the second time cleared another batch of emails related to Hillary Clinton's use of a private email server. The rally broke a 9-day losing streak for the S&P 500, its longest since December of 1980. The Dow Industrials closed up 370 points. On Tuesday, the JOLTS job openings report for September was up 0.6% to 5.49 million. On Wednesday, traders were surprised with Donald Trump's unexpected victory, and stocks surged with the Dow Industrials closing up 256 points. Some of the winning sectors included banks, defense, and infrastructure providers, and some of the losers included hospital operators. The Mexican peso was down sharply against the dollar, and 10-year Treasury notes soared 22 basis points to 2.07%. Also on Wednesday, the EIA Petroleum Status Report for the week ending November 4th showed an increase in crude oil inventories of 2.4 million barrels. On Thursday, jobless claims for the week ending November 5th fell 11,000 to 254,000. Markets were volatile as investors rebalanced their portfolios based on new assumptions for economic winners and losers caused by Trump's surprise win. The Dow Industrials gained 218 points to close at a record high. However, the S&P 500 only rose by 4 points, and the Nasdaq Composite fell by 42 points. On Friday, consumer sentiment for November rose 4.4 points to 91.6. Markets opened slightly lower as investors took a breather from the recent market rallies. Now let's take a look at some stocks. On Monday, Windstream Holdings, Inc., a telecommunications and data services firm, announced a merger with its rival, Earthlink Holdings Corp., in a $1.1 billion transaction. The deal is expected to close in the first half of 2017. After that, shareholders of Windstream will own 51% of the combined company, and shareholders of Earthlink will own 49%. Valeant Pharmaceuticals International posted lower than expected profit due to weak sales of its dermatology products and irritable bowel syndrome drug. The company also cut full-year profit and revenue forecasts. Its stock fell almost 30% during pre-market trading Tuesday morning. Prior to this earnings release, Valeant had fallen over 90% since 2015. CVS Health Corporation lowered its profit forecast for the year and warned of weak growth for 2017 as the company said that it will lose 40 million prescriptions next year. The biggest U.S. drugstore chain expects adjusted earnings per share of about $5.80 in 2017. However, analysts had expected earnings of $6.52 per share. Lending Club Corp reported a smaller than expected loss and said it stopped needing incentives to attract customers. Its stock jumped as much as 18% to $6.03 a share, but it has tumbled 54% this year. The company reported a loss of $36.5 million or 9 cents a share in the third quarter, compared with a profit of $950,000 a year earlier. Hertz Global Holdings saw its shares lose almost half their value after the company posted a worse than expected quarterly report and cut its full-year profit outlook. Hertz Global, which operates the Hertz, Dollar, and Thrifty vehicle rental brands, posted adjusted earnings of $1.58 per share in the third quarter, missing analyst estimates of $2.73. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.